You've been told to buy gold out of fears that massive amounts of government spending will lead to currency debasement. In fact, we're talking specifically about the dollar. But this recent crash in gold, it's not the dip buying opportunity you've been looking for. In fact, it's a brutal wake-up call that your untouchable hedge that can only go higher is starting to crumble. Now, if you're overweight gold right now, it's threatening to wipe out your investments as a massive amount of leverage is about to unwind faster than a meme stock. And the trap now has been sprung. And with everyone heavy long gold, I'm going to show you exactly why you need to sell now before your wealth gets wiped out. Now we see gold extended losses in a choppy session after suffering the worst rout in 12 years on October 21st. This was on concerns that its rally had run too far, too fast. And by the end of market close, it had plunged 6.3%, and that set up buyers to grab the dip. But today, shortly after markets open, the selling has now resumed. Silver, well, it was much worse. Following an 8.7% rout, the selling continued. Now the gold chart is starting to look like a meme stock breaking. Pure panic here in the markets. But if you own gold, it's not too late to cash in your gains. Now if you think, Steve, these prices, they can't come down. Think again, because when you see that gold is the most overcrowded, one-sided, hyper-leveraged trade out there, then you're going to realize, as I'm about to show you, that the fire sale is just starting. Let's talk about the contrarian angle here, because mainstream is going to spin this as a healthy correction, but it's nothing close to that because they want you to buy the dip as sellers step in here. Now, surveys are showing that more than 80% of investors are bullish on gold, and that all this buying of physical and paper gold has forced hedge funds, institutional investors, retail investors, algorithmic funds, you name it, traders, everybody is piled into the long side of this trade. And the problem for markets is once you have everybody on one side, well, then the exact opposite starts to happen. And you're going to hear that technical selling is the main culprit. This from Suki Cooper, the head of commodities research at Standard Charter. Prices have been trading in overbought territory since the start of September, she said, adding that the bank expected gold to regain its momentum next year. Now, technical selling doesn't happen just because prices hit new highs or in oversold territory. It happens for other reasons here. But I want you to hear and understand her message very clearly. She's saying, look, don't panic. It will regain its momentum in a few months or more. And she's hoping. And why is that? Because some of these big players that have bought massive amounts of gold, they can't sell it fast enough. And that's exactly what you hear when nobody knows what really happened. But hang tight, because I'm going to show you why this epic rally in gold is likely over. Because the reason investors are piling into gold is over the so-called debasement trade, in which investors avoid sovereign debt and currencies to protect themselves from runaway budget deficits, and bets that the Federal Reserve will make at least one outsized rate cut by the end of the year. Those have been the primary drivers for gold in recent months. But yet investors don't realize the federal government can't print money. Federal Reserve can't print money either, and rate cuts don't inject liquidity into the financial system. The only way a rate cut can inject liquidity is if people come out and borrow because rates are lower. Because remember, the only institutions that can create money, that's the commercial banks when they lend. So what we're facing right now is really consensus among investors that you just need to buy gold. Not to mention, they believe that the dollar is going to get weaker. And adding to the narrative, foreign central banks have been big buyers of gold. What you're seeing here again is everybody's buying gold. But here's the truth. If something is going up in price, and again, it doesn't matter what it is, you can think back to every bubble back in the dot-com era, to the housing bubble, everybody wants in because everybody wants to get rich. And after sitting on the sidelines for much of the early period of gold's rally, retail investors have taken a bigger role in recent months, and part of enthused by the debasement theme. And pictures showing queues of buyers lining up outside bullion retailers went viral on social media. Options volume on top gold-backed ETFs and futures contract, a popular way for retail investors to take big bets on the metal value, have surged. And boy, wait till you see these charts I'm going to show you. But what you're seeing right now isn't people just buying gold because they want gold. They're speculating on the price going higher and that someone is willing to pay an even higher price than they are. Now, I want to show you just how easy it is to make a ton of money trading because we give our subscribers something no one else does, a ton of information. Check this out. This is an optimized trade we put out to our CTA Timer Pro subscribers on the 15th. We told them to buy PHO. And why is that? Because based on our optimization and our full back test, it said when this signal trips, it has a 100% win rate with a 3% average positive expected return. So you can see, based on the data, we make it so easy for you to make money trading. All you got to do, grab those links in the description below. Use a coupon code for your free 30 days trial. Sign up, start making money. Stay tuned to the end of the show for more information. And we've seen this story before, particularly in meme stocks. But how about that recent crypto Armageddon that wiped out billions of dollars in a matter of minutes? See, investors went all in and they leveraged themselves because they thought price was only going to go higher. And then the opposite happened and they got wiped out. And that's what you're about to see is going to happen to gold. Because right now, everybody thinks the dollar's going down. So the real trade is sell dollars and buy anything but the dollar. In this case, we're talking about gold. Because eventually the older part of the gold bull story, continued central bank demand to diversify away from the US dollar, may come back. Because remember, the dollar is a safety trade, world's reserve currency here. But at current levels, there's no rush to position for that. Well, not yet. Well, hang tight, because right now the dollar is slowly inching towards a breakout. And when it does, this is the most crowded trade on the planet right now. With the short dollar trade, when it breaks, the dollar's going to go screaming higher, and it's going to send gold plunging. And due to the government shutdown, many investors are left in the dark at a time when investor holdings of physically backed gold exchange-traded funds reached their highest level in 3 years as the bullion suffered its biggest one-day plunge since 2013. So there's a lot of questions right now. Why did gold come crumbling down on Tuesday? Well, we're going to take a look why. One of those reasons, it happens to be that investors are in the dark. Because right now they're lacking the weekly report from the Commodity Futures Trading Commission that indicates how hedge funds and other money managers are positioned in U.S. gold and silver futures. Without the data, speculators may be more likely to build abnormally large positions one way or another, and you can better believe that's exactly what's happening here. Because once everyone's piled in on one side of the trade, the market shifts. And what happens now you're seeing is people take the bearish side of gold, and I'm going to give you the proof right now. Let's take a look at some charts from Goldman Sachs commodity desk, because what you're about to see is going to shock you. So if you're thinking what happened on the 21st is a one-off event, I'm going to show you right now it could get, and it's likely to get, a whole lot worse. And for the answer, we turn to Adam Gillard. He's a specialist on the Goldman Commodities Desk, who writes that price first drifted lower during China before hitting stops on the London and U.S. Open. What's more notable is that there was, quote, no obvious smoking gun we can see, suggesting that nobody really knows what happened here other than the fact that you have a highly lopsided trade. You have the dollar looking to build here and break out. And when it does, it's not just going to take gold with it. It's going to take everything else. Because remember, the biggest trade here, short the dollar, buy everything else. Now let's take a look at some of these shocking charts. Let's first take a look at ETF volume here, and what you're seeing as of Tuesday's close. GLD accounted for 8% of all notional US listed ETF volumes, meaning what happened here is people bought the dip. They've been waiting for this. But hang tight. I'm going to show you why this isn't the dip buying opportunity that everybody thinks. Let's now take a look at this chart of ETF options, and this is the total amount of inflows gathered by spot gold ETFs over the past year. Now, I want you to know that over half of this is attributable to demand over the past 3 months. Think retail investors here, because what happens with retail investors, they don't buy low and sell high. They buy high and hope it goes higher. So this is very critical to understand. What we're seeing is people chasing price. Now let's look at this next chart of ETF options, because what we're seeing is GLD. This is the ETF option open interest notational. Sits at an all-time high. Now here's what I want you to understand. If you're not familiar with this, when open interest hits all-time highs, it means the herd is all shifted in one direction. So we have no balancing shorts to absorb any shocks. Now what this is telling the market, particularly I want you to think what hedge funds are seeing when they see this chart, is there nobody left to buy and no one's hedging themselves on the downside. So when everyone's bought in, traders and speculators will start to pile in on the opposite end of the trade, thinking there's no buyers left. Now, I want you to think recently, this is exactly what happened in the altcoin space. It blew up. And what happened? Everybody was levered long on that trade. There was no downside protection. A shock hit. And next thing you know, that leverage gets wiped out, price crashes, and people get wiped out. So the problem here for gold is we're also seeing a lot of leverage trades. And keep in mind, when leverage unwinds, price will continue to plunge until the market flushes out all of the weak hands. So what's the payoff here? How can you profit from this? Because this gold crash, as you've just seen, isn't random. It's the market's brutal correction of an overcrowded leverage bubble that some people think they can make a ton of money on. Now, if gold prices breach their 21-day moving average, we're eyeing more downside. We're thinking 3,800 an ounce or perhaps lower, and this is based on some analyst targets. But if the Fed resumes aggressive rate cuts amid sticky inflation, a rebound here could spark, but there's no guarantee because if the dollar breaks out, you can see this could turn into a volatile mess. Now, here's the real part. I want you to do this. Think about selling and locking in some of those gains you've got on your gold before the dollar short squeeze and leverage unwinds it and causes it to spiral down even further. Now, maybe you want to hold your gold. You think, well, maybe it's going to go up. But what if it does go down in the short term? You can hedge your downside risk. Maybe you want to short gold or go long the dollar. Both places can work. So why does this hit home for you? Because we're talking about your savings. We're talking about your 401k. You might not own gold in your 401k, but you probably own tech stocks. So what we're facing here, if the dollar does rally, you could see further job losses in export-led heavy sectors. You could see tech stocks come down. You could see gold come down. So here's what I want you to do. Don't let the safe haven of gold illusion let you lead you to a big wipeout event. So here's what I want you to think. Diversify into bonds or cash equivalents now. Trim your gold exposure even if you want to stay long. Maybe hedge those long positions and watch that 4,000 level. If it holds, you may want to buy cautiously. If not, it's time to cut and run. But if you're looking to trade and make money in the markets, look no further than my CTA Timer Pro, because now it's fully optimized on a per security basis, and we're changing the game. We're giving you more data, more information to put on amazing trades. Let's check out this recent trade we put on PHO. We put this out to our subscribers on the 15th. It triggered on our CTA slow algorithm, and check this out. Based on our back-tested data, we predicted it had a 100% win rate every time it triggers this level and had on average a 3% positive expected return. Here you can see we're not quite 10 days in and that trade is already up. And talk about an amazing amount of data that we provide our subscribers that nobody else does. So what's the advantage of an optimized trade over one it's not? Let's take a look at this back test on our Metre strategy over the last 2 years. We had a total return of 71%, beating buy and hold, a 66% win rate on 69 trades, and a max drawdown right around 7.5%. But let's compare this to an unoptimized strategy that's run by my buddy Jay Bravo. He calls it the Bravo 9, and you can't trade this based on by itself. In fact, he tells you can't either. With mine, you just follow the signals and buy, but check this out. Total return 51%, missing buy and hold. Win rate just over 51% on half the number of trades. Max drawdown right around the same levels here. So how do we do this? Well, every day we take a look at machine positioning and we look to put you ahead of a big buying spree and out before the machines sell. But the best part, we fully optimize this. And here's the great part. Not only do you get those signals, but you get my meta strategy signals as well. You get the daily report. You get all the signals. You get my opinion on the best trades. We give you full risk control levels, a tracking of all open trades and returns, a weekly update. And here's the best part. Whether you're brand new to trading or maybe you're using an inferior strategy like the Bravo 9, we're going to give you 30 days to compare, because you can see with the data we're giving you, you're going to have a better chance of making more money in the markets than you ever have. And with that, all you have to do is grab those links in the description below and use a coupon code for your free 30-day trial. I'm Steve Van Metre. Thanks for watching. Bye now.